Welcome to Crazy Cash Flow. I'm T-Bone Pearson, and we are in the midst of a market crash. But we have to remember, Charlie Munger, who is Warren Buffett's partner in crime, they are owners of Berkshire Hathaway, said if you can't stomach 50% declines in your investment, you'll get the mediocre returns you deserve. Now, these guys are ancient guys. They're like, I don't know, what are they in their 80s, 90s? Old dudes, but they've been through everything. And so you have to be prepared for this psychologically. That's the tough part. Because when you look at the charts, everything's going to be okay. So if we go to, let's see, we can probably do it in here. We'll come back to this. But let's put in the SPY. Now that's a, what are we looking for? The SPY, ETF Trust. Let's look at the chart here. We'll go to max. And so, like in the long run, yeah, we're down, 32% today, March 22nd, 2020. But this down here is the Great Recession. So it dropped, it looks almost about the same amount, maybe a little more than this drop here. This is where we're at right now. So we fell off a cliff here, out of the blue. This is 2000, the tech bust. It went down there, came back up. It almost looked like it is at the same level. The heights of the tech bust, it hit the heights, it almost matched it, 2007, and then fell off the cliff there, and it's been going nonstop for 11 years. Here's that little one that was the end of 2018, but this is a nice one. This is the biggest stock market. I haven't been through a crash before. So the definition is a correction is 20%, and past that, I think technically, I would say by 30% we are in a crash. Now it could keep going down, but like Munger said, as long as you're prepared to be okay, rational, with 50% of your portfolio gone, don't be in the market, basically, is if you can't handle that. So it's been scary, but I've done okay. I've made mistakes, and I think you'll learn from this. It's a learning experience of how to deal with a market crash, and we may have a recession after this. My thoughts are that the flu will go away, and things will rebound, especially if we can, it's the gas war, the oil war, price war, that's what I'm trying to say. It's that and the flu at the same time that's really dinging the market up. So if we can get over this price war, maybe put some pressure on Saudi Arabia to stop, pumping oil, maybe Russia cools off, maybe we'll be okay. Things will turn around in the market a little bit, get a little bit more bullish. But when the flu's over, we all stay inside, we practice social distancing, we'll be okay. The flu can't survive if there's no people who are infected talking to other people who aren't infected. So if we can just do our part, it should go away. China seems to have turned the corner and things are looking good there. So anyway, yeah, you have to be prepared with this. It could keep going down. The proper mindset, I believe, is actually PPC Ian, he's a YouTuber, has trained us well to focus on your cash flow and not your ego number. Speaking of, let's go to my ego number in my Make It Rain portfolio. So I think I'm down big. I'm probably down $10,000 in this. But I've sold Tesla. I had 28 shares, I believe. Now I'm down to 20. So I luckily sold a third of it when it was at its high, around the 900s. I should have sold more because I have taxes coming up, and I should have put my taxes aside. That was a mistake. I should have sold more. But hindsight is 2020. I've sold some on the way down as well, just so I had cash to buy more stocks. So I sold around the, I think, 600 range, 500, 600 range. I sold some more shares just so I could have cash, because I, again, have learned that I need an emergency fund of cash for things like this. If this happens, you need cash so you can buy the good deals. So I had to sell off some of my beloved Tesla shares on the way down so I could have cash. So I still have a little bit of cash, but I've been buying all the way down. So in this account, this is a new one here. I have bought Shell oil, which I didn't have really much oil. Now Vermilion technically is oil, and Enbridge is too. I own those. But so I bought this because of the yield. So right now my strategy is just hunting yield. What is my monthly cash flow? Like right now my cash flow is, I've got $244 coming in a month, not just through this, but just through other investments as well. So I want to get that number up. So I'm not focused on this, the ego number. That will go up and down through the years. PPC Ian says focus on the cash flow. So the money coming in every month from dividends. So that's what I've done. I've sort of shifted my brain. I don't really care about this number anymore. So let's go to Royal Dutch Shell. Now you want to buy dividends that aren't going to be cut, especially if there is a recession. You always have to be prepared for the worst case scenario, then hope for the best. So if you're prepared for the worst, and it's better than that, then you're cool. So when I was buying, I think it was at 11%, but now it's at a 16.7%. Now, if this oil price war thing goes away, hopefully they can maintain the dividend. But that's fantastic dividend. It's incredible. So it's fallen off a cliff here. Looks like December 15th it was down low. So it's cyclical, oil is. So it's down pretty far right now. The last time you could buy it at this price would have been, geez, back in 1993. So I may buy more of this. Hopefully they don't cut the dividend. Even if they do cut the dividend down to, let's say, even like back to a manageable level like 8%, that's fine. Now another one I may look at shortly is Suncor, which is here in Canada. Let's have a look here at the Toronto Stock Exchange. It's 11.9%. I believe Warren Buffett owns a pile of this. And this is basically our biggest oil company. And it's been really hammered. So if we look at the price here, it's went from 40 in February, February 20th, 2020. So basically a month ago, it was at 40. Now it's down to 16. So with a huge dividend. They've got pretty good books, I believe. So this could be something I'll be buying in the future at 11.9%. Again, I'm just looking for yields, and I'm not worried about the top line number. So I've got that. I may add Suncor this week. I have to be very careful with my cash on the way down because you can run out and then you just have to eat it and not take advantage of these great deals. So I've got that. We've got Geo Group. I've got 14 shares there. I think I'm down on that, but they pay a good dividend. So it's all about the dividend. I'm at $244 a month coming in from dividends. I need that to grow. That is my focus. And again, I don't care about my ego number, what it is right now. You wouldn't want to sell your stocks right now anyways. So this is a 15.78% dividend. How are they? They haven't been doing too bad. Let's look at the max chart. So the last time you could buy at this price would have been quite a while ago, right back here in the Great Recession. You could have got it for $7.88. This is December 11th, 2011. I mean, could have bought it around there. So I like this too. The founder just bought. Now this is last month, $4.5 million worth of shares. That's always a good sign because they've got the inside track. So that I may buy some more Geo Group. I might buy some, again, Suncor and maybe some more Shell. My Tesla is way down from when it was up at 960, I think was the top. So I'm down big on that, but I was buying this stuff at 230 and 300 area, so I'm still up on this. But that's a pain. All right, we've got AbbVie. So this is about where I was buying it originally. I was buying it around $66, and it went up to like I think at 90 at one point. But this is paying me, I think it was like a 6.5% dividend when I was buying it back then. And let's see what it's at now. Probably around the same, I would think. Yeah, 6.6%. That's what I was buying at. So, yeah, sort of. I'm not really down on any money in that. BABA has surprisingly been holding its own. I think I was buying around the 180 mark, so I've just sort of like lost all my gains, which is the beauty of a dividend stock like AbbVie. I've been getting paid dividends since last year when I was buying, so that's nice. With BABA, you don't get that, but you've got the potential of way more growth. This hasn't been a good investment, although I don't think they've cut their dividend. They may have, I don't know. Let's see. They've gotten hammered. Yes, you can time the market. Okay, so yeah, I'm not sure what's going on with them. I'm not going to invest in any oil companies that aren't huge because you don't want them to cut the dividend. Suncor is our biggest. Shell's a big company. I've got hammered on Vermilion. Probably lost about $1,000. And they did cut their dividend. So they prided themselves on not cutting their dividend, but they did because they're a little player, and oil at $20 a barrel, they had to cut their dividend and protect themselves, which makes sense. So Vermilion shares fall after it cuts dividend due to the virus hit on oil. And so the shares obviously drop after people cut it. They'd never cut their dividend before, even through the Great Recession. But at oil prices at $20 a barrel, you know, they have to protect the company, which is fine. So they've cut it down from, I think, 11 cents per share per quarter to 2 cents. So I think it is let's check. Again, I'm not going to buy any more, although I'd like to throw a little bit in to average down, because I doubt they'll drop it again, but it's down to, this isn't right, I don't believe. That it's been cut. So also Chemtrade, which did not cut their, let's see, they did not cut their dividend through the recession. They've cut their dividend. So that dropped. I'm pretty sure they've cut theirs. Dividend history. They have cut theirs. For sure. So, but that one, I read the CEO's message and he was basically just cutting it so that they'd be prepared. Because I think they have some exposure to oil and gas. But right now, this is after the cut. It's still at 16.9% because the share price dropped after the cut. Let's see if we can see it here in the charts. That's probably it right there. From 7 down to 3. So I still like these guys. I've bought more. Where was this? Last time I could buy it was the Great Recession. And this is the cheapest price it's been since they started, it looks like. This is the maximum chart. But I have bought more of them. I do believe in Chemtrade. They're the biggest sulfuric acid supplier in North America. All right, so I've got lots of that, and they pay a great dividend. And this has been my winner. Pizza has not cut their dividend, and they had a terrific fourth quarter, 2019. So they are now paying. They've dropped in price, and they're paying a 13.8% dividend. And in a recession, my theory was, if you listen to my old videos, is that they would do very well in a recession because they're sort of cheap, good pizza, and people would, be using them instead of going out to something like a Boston Pizza or, especially now with coronavirus. But see that big spike right there? I think people are thinking what I'm thinking, and I've bought more of this. So at a 13.87% dividend, that's fantastic. Now they still could cut their dividend. It's a bit of a risk, but I'm going to put a little bit more money into them. They have not cut their dividend like the other two. Now I knew with the other two that I was playing with fire if there was a recession. I didn't see it coming, nor did anyone else. We didn't think a pandemic would, get us. But yeah, so Pizza, I've been very proud of how they've handled things. And then also Hot, I don't think they've cut their dividend yet, but their prices come way down because it's a hotel attached to, it's for railroad employees. Maybe railroads are slowing down and people are practicing social distancing. So there we have. So this number, yeah, I'm not worried about that. It's more cash flow. What are you guys doing? How are you guys handling this? It's tough with jobs, because how do you work? You've got to work from home. I edit. I'm a video editor, so I can do work at home. That's nice. But for you guys, how are things going? Are you guys buying stocks? Are you guys looking at the opportunities? Anyways, this is just for entertainment too. It's like if you are in the stock market, you could win or lose. And I've been losing more than winning, but I've shifted my focus to the cash coming in, which, yeah, it's not a bad thing. It's just a different mindset. And then you don't mind when the stock market goes down because now there's better deals. But you do have to have cash. That's one thing the takeaway is always have an emergency fund. Maybe I'll have 10% in cash. From now on, I had little cash, and I had to sell off some of my favorite stock, Tesla, to get the cash, and which I didn't like to do. But I'm glad I sold at the top. that was one good move that saved me a little bit. Anyways, guys, if you have any questions, let me know what's going on with you guys. How are you taking the isolation? Are you practicing social distancing? How are your finances? I know things must be rough. There was a few days there where it really hit me. But now I've come out the other side, and now I'm just trying to learn and take advantage of these opportunities to buy high dividend yields. I'm not really focusing on the growth ones anymore. I'm not buying Tesla or Baba, which are my growth plays. I have bought some Apple and some Microsoft, but not too much of it. Anyways, guys, please comment below. Let me know how you guys are doing. I hope everyone's well. Everyone's feeling good. And anyways, guys, I will chat with you guys later. Thanks for watching. Please subscribe and click that like button. Okay, guys, cheers. Bye.